Hey everyone, welcome to the KU Report and a company update from Kuya Silver, chatting with the president and CEO David Stein. We're going to be getting a more operational update from the Bethania Silver project in Peru, as most recently, back on October 17th, the company reported record concentrate sales from that mine in Q3 and upgrades to mine infrastructure, as well as a couple additions to the senior management team. Kuya Silver is traded on the CSE under the symbol KUYA, on the OTCQB under the symbol KUYAF, and the Frankfurt Exchange 6MR1. David, let's talk about that October 17th news. As I said, record concentrate sales from the Bethania mine. You are still very much in ramp up here, as we've been talking about all this year, but walk us through what came out of the Bethania mine so far in Q3 that you reported on, please?
Well, I'm on the positive side. We had really good silver sales from concentrate production, good recoveries, still rising quarter over quarter, and we were able to make some really important improvements that are really gonna, kick off, I think, a much more stable and lower risk operation going forward. So on the negative side, I guess we didn't produce as much ore tonnage as we wanted to, or mineralized material, I should say. And that was because basically we were shut down for a good chunk of the middle of the quarter due to some technical issues that we had at the mine that we were not expecting. Our air compressors, we had two of them, and they both failed simultaneously or broke. And we had to repair them, and we were expecting it to be, frankly, a much shorter delay. And while we were repairing them, and the repairs dragged on, we decided to actually find a new piece of equipment and get that installed at site. And so we did that instead, and that took a little bit while longer, but we felt it was worth it. And now everything's up and running and back on track, and we're very happy with how things are going in the first half of October. So it's looking really good. A little bit of a hiccup there, but we're more than well enough capitalized to handle these types of things going forward. And, like these hiccups do occur in mining. It's not uncommon at all. But, we're working towards a much more well capitalized, less risky, more spare parts available, more redundancies in the mine so that we can ramp up a little more smoothly than it has been to date. And as I said, it's looking very good in Q4 so far.
So in terms of those upgrades, okay, you mentioned that you brought in maybe some different equipment. What do these upgrades look like for the continued growth in terms of production?
So, specifically on the air compressor, what that's used for is it's for ventilation, and also some of the equipment run on, pneumatic pressure using the compressed air. So it's an important piece of equipment. We now have the new big one, which is operating already on site, and we have two smaller spares that were our previous ones we were using up until July. So that it's one piece of equipment, but now we have, the capacity to probably do, run the whole mine with the one compressor, and then we've got spares, or we can add them if we want to grow further. We can add them back, in parallel if we need them. So I think we're now looking at going around to like all the critical parts and machinery and equipment that we have, and just making sure that there's redundancy there so that we can, keep going through thick and thin.
All right, David, let's dive into table one from that news release. It's the numbers of production, recoveries, grade, everything that I think really matters for this whole production scenario. Let's start off at the very top here, where we see mineralized material mined and mineralized material processed. We talked in Q2 about how that was a whole ramp up. We see how much more mineralized material was mined compared to how much in Q3, and the processing, which kicked in Q3. Explain what goes on here in this whole mining scenario with mineralized material that's mined compared to what's processed, and where do you expect to see these numbers trending as we go through Q4 and into next year?
Sure. So, in any given quarter, there can be a big difference between mined and processed material, and you really see that in Q3 and Q2 of this year especially. And so the mine material is basically what's been drill and blasted at site inside the mine. And so that would be our tons mined. And then the processed is what we run through the mill, which right now we're using a toll mill, which essentially is renting someone else's mill. And we've been using the same one the whole time. And what we do at the moment, just because we're still ramping up, is we deliver that material in batches. And so we'll process a batch, and then we'll build up another stockpile at site. We'll ship it. We'll process it again. That will become more basically of an automatic daily thing as we get closer, to 350 tons per day later next year. But at the moment, basically, it's a bit of a stop and start kind of situation. And so that's how you can get the difference between the numbers. We didn't do any processing in Q2, but we caught up in Q3. So while the mine production numbers were low on the low side because of that work stoppage that we had due to the compressors, we, at least financially, we made up for it by processing all that extra backlog ore in Q3 and being able to sell it at an average of $40 an ounce instead of, it probably would have been 30 something or the low 30s in Q2, right? So if you look at things operationally or from the mine operations side, maybe a little disappointing. You look at them from the financial side, not so bad. So that's kind of how things go. And in a perfect world, they should match up 1-to-1. And as we get further, and especially at some point, in the next year or so, we have our own mill, then basically there'll be no time lag between the mining and the processing. But for the time being, that's what happens. And so it's actually worked to our advantage because the silver price has been going up.
Yeah, it did. Good thing. Hey, better to sell those ounces in a higher price environment. But let's also talk about average head grade then. Going down to the next category here. It's been pretty consistent, especially on the silver front. Generally rising, I guess, is in Q3, you're almost at 11 ounces per ton for the average silver head grade. We look at the silver equivalent grade, and that was rising through May, December 2024. Q1, it kept moving higher. Q2, again, a bit of an anomaly. But Q3 still seems to have that upward trend, a little bit off of Q2. Is this the general average head grade that we should be expecting from this asset?
Yeah, I mean, we're almost right on our indicated resource grade from our resource estimate several years ago. So while I'm sure it will go, we could have a plus or minus 1 ounce per ton, a quarter here, a quarter there, like that. So I wouldn't expect it to be like flat, perfectly flat all the time. But in general, we're getting really good matching up with the resource model. And, there's always variability in the mine, but, maybe not as much in our mine as some other mines. So it's looking really good. And just a note on the silver equivalent, the only reason the silver equivalent went down is because of the silver price. So ironically, if the silver price goes up relative to the other metals, then your silver equivalent grade goes down because essentially those byproducts aren't worth as much anymore when you turn them into silver. So, I mean, for us, the byproducts don't really matter that much. We're getting probably today more than 80% of our revenue from silver now. So we have one of the most silver-rich silver mines in the whole public markets. But with that being said, the silver equivalent numbers going down doesn't concern me at all because it's really just a mathematical thing.
Okay. Thanks for outlining that. Now, what about the recoveries? You mentioned that recoveries have been improving. Silver, lead, zinc, they're all improving. But because this is such a silver dominant asset, look, that obviously is encouraging. And 91, almost 92% average recovery for silver is actually quite high. So give us some clarity on what's causing these better silver recoveries. And again, should this number around 92% be what we should expect?
Yeah, great question. I think our own metallurgists and consultants have done a really good job at kind of tweaking the process at the toll mill so that we know when we're running our ore, we can get a little bit better recovery. And, we've been pushing it towards, almost 92% this quarter. So, yeah, I mean, I think when you think about producing silver in a concentrate, there is an upper limit on what kind of recoveries you can get. And it's probably, 94, 95. Obviously, the higher the grade, the more better recoveries you can get. But we're getting close to that max recovery already, and this is with a toll mill that's not set up, properly for our ore. So when I think when we do eventually have our own mill, which is in the plan, we'll be able to bump it up maybe by a few more percent. But it's already very good, and again, that's a credit to our team who are monitoring our results as it goes through the mill and tweaking things, and also the mix of materials that we send, and it's all working very, very well.
All right, David, as we've been talking about this mine ramp up, we've been outlining some of the key production numbers that you want to get to. The first being 100 tons per day, and then looking at 350 tons per day, and also talking about operational break even. Let's start with that 100 tons per day. You had initially guided that it would happen at the end of Q3, but you did have that unexpected shutdown due to those air compressors. The news release says that you have developed sufficient working areas to produce more than 100 tons per day. Talk to us about the timing of that now, please.
Yeah, so the difference between having the working faces open and actually getting the production is essentially you got to connect all the pieces together to get that material out of the mine. And one of it is increasing our staffing, and that's actually the main thing. And then the other parts are, equipment here and there, but we've been actually getting all that stuff lined up, as well as just the working faces being ready to drill and blast. So we're almost there. And in the press release, I said a 4 to 6 week delay, and I'll stick to that for now. I think we should be there. That would sort of put us by mid-November. And then, in terms of the operational break even, it's something that you won't necessarily see this quarter in our Q4 financials, because you'll just get basically a blended average for the whole quarter. So it's hard to tell exactly when we break even per se, and it's even hard for us. We don't do daily financial results, but what I can tell you is that in our own internal modeling, we are actually slightly profitable at 100 tons per day, and that's at lower silver prices. And so if we were to run our models at $50, we probably don't even need 100 tons per day to break even. We could probably do it at 80 or something. So I think we're rapidly getting to the point where this mine is going to be profitable, and like small amounts of profit no one cares about, honestly. Really what that means though is it just reduces or almost eliminates that dilution risk, which is a big concern for investors. They don't want to see any more dilution, and I think we're now in the position where at least for our status quo Bethania mine, we are frankly in good shape, and we have plenty of money to do whatever projects we need to do going forward.
You are right. That's what investors care about when you get into some early stage mining, is when you will at least turn somewhat of a profit, so that eventually you can reinvest that money back into the project, back into expansion. I'm going to keep asking it until you put something in the news release. So thanks for covering that, David. What other projects, what other stuff do you need to do at this mine as you continue to expand? Any big ticket items we should know about, or anything news flow wise that could be coming that really shows the continued advancement operationally here?
The only big ticket item that would be, out of the normal course is the new ramp that we announced in September. So that is in the final stages of planning, and we'll probably be essentially starting to drill and blast that pretty soon. And that's something that we've added to the mine plan. It was not needed or required necessarily in our previous plan, which was, the PEA that we put out a few years ago. But we've added it to the plan since then because it accomplishes two things. Number one is it makes that ramp up a lot easier, because you've now got a bigger, essentially, tunnel to move material out. You can start to move into larger, actually rolling vehicles instead of relying so heavily on mine carts and tracks. So that's a big transition that will occur as the ramp gets deep enough to start, getting to our mine level where we're mining the material right now. And the other thing it does is it allows for, not quite unlimited, but, it allows us to go much, much deeper in the mine, which the previous, PEA plan did not really contemplate anything beyond the current resource. So we're very confident that the veins continue at depth. And so the ramp gives us now a way to get material out without having to, sink a shaft or do anything that would be like a major multi-million-dollar expense in the future. And so that's very, very exciting. It can also, handle more tonnage than even 350 tons per day. So if we ever want to expand the tonnage out of the Bethania mine, which I think we already have the working area in there, we already have the infrastructure in the mine, which will be this ramp. So it serves, many purposes, I guess, in terms of improving the Bethania mine, making it less risky in terms of the ramp up, and also, giving us more growth in the future. And it's not a huge ticket. It's something like 1 to 1.5 million, at least for now. And then obviously it'll be more sustaining capex to make it go deeper in the future years. But that's all we're going to spend on it this year or into 2026.
One other point that I want you to quickly outline from that news release are the management team additions. You have a new VP exploration and a new mine superintendent. Take us through what's going on here. Why bring these fellas in, and what are some of their backgrounds, please?
Well, we're, good timing, really. We recruited a few people in the last few months, but yeah, we're very pleased to have both Gerardo and Osvaldo. Osvaldo lives in Canada, but will be actively managing and overseeing the exploration at Bethania and all our other properties as well. So really part of the corporate head office team. And he's a PhD geologist. He's worked for many other mining companies, mostly in North and South America. So he's got some good Mexican silver experience as well. And then Gerardo is just a really, really well qualified, engineer in Peru who's joined us to run the mine, and is doing a great job. He's a qualified person as well, educated in Australia, but Peruvian. So that's kind of the senior management additions that we have right now.
All right, before I get you out of here then, David, let's talk about what's happening Q4 at the projects. I understand there's some drilling happening, or at least planned to be happening this year. Is that still on track?
Yeah, it is. And I guess besides all the production ramp up stuff that we've already discussed, I think the other big piece of news going forward is going to be the drilling program. For the first time in 4 years, where we have the financial capability to drill at Bethania, and we are doing it. We are going to do it. And, I think we should be able to just continue. For the moment, we've just approved a 5,000 meter program, which will start very soon and take us into early next year. But I think we'll just kind of continue drilling from there, as similar to, some of our peer companies that operate, high grade silver mines and just continue to drill, sort of month in, month out. We're now, in the position where we can do the same thing. So very excited to see the first results that come out as the place that we've decided to start is to drill the current vein system deeper. So we're bringing the drills in underground. We're setting them up in new drill bays that we're developing right now underground in 7 different spots. And then each of those spots will drill like an average of 5 holes. And then targeting all 3 of our vein systems at depth. And we should be able to move some inferred into indicated because we'll have more data in the lower blocks, in what's currently our lower blocks. And then we'll also be able to add inferred resources below that. So very, not only good to demonstrate that the mine continues to grow in size at depth in terms of the resource size, but also is going to be very helpful for the miners as well, because they're going to get more data to help plan the mine.
How deep are you planning on drilling then, David? Give us a little context here of just what you're mining kind of size-wise, and then how much you're looking to expand that down at depth with this drilling.
I think of this program, we're going to get an average of about 50 meters is where the pierce point's going to be. So we'll be able to drag the model down below that. And how deep, I guess, depends on the data that we get. So, the more consistent the results are, not only amongst themselves, but also with the levels above, then you probably get a bigger zone per drill hole in terms of what you can carry in a resource. So it's not something necessarily that we can like say for sure we're going to get this many ounces, but 50 meters in and of itself is probably about a quarter of our current resource, because our current resource average is about 200 meters in thickness and from surface. And keep in mind that includes several million ounces that are already mined out. So it's not it's not necessarily a one for one. We should actually get more ounces at depth because there's no mining's ever occurred there. And so I think it will be it will be very, very positive for not a lot of drilling.
All right. Well, David, thank you very much for this update. Everyone listening, click the link in the show notes to visit the KUYAF Silver website, read over the recent news, and please continue to send me any questions you have for David. I'll get him to address those on our future calls as we continue to cover the growth at the Bethania Silver Mine and the expansion of production. Again, David Stein, President and CEO of Kuya Silver. David, thanks for your time today.
Thank you very much, Corey. My pleasure.